the single family rental market is one of the largest asset classes in the world. It's $4.7 trillion. And 88% are owned by individual investors that have less than 10 units. People like me that have less than 10 units. So now that's a $3.8 trillion market. So if you're looking for a big market, that is a big market. So how do they typically do it? And then they typically work with a property manager or a local agent, and then they find all these things, and they've got to do all the DIY platform. And what there are out there are like asset management platforms to plug into your property management accounting software to help you kind of do your taxes, but they're not going to be the ones. The software doesn't actively build your portfolio, it doesn't actively police your property management, doesn't actively shop for insurance, right? It doesn't do all these different things in between.
Who's this? Oh, you're an entrepreneur? Oh, you're a real estate investor? Oh, you're trying to learn from those who did it? Well, come into the lab then. Put your white coat on, gloves on, notepad, and let's build, y'all.
Real estate experiment. What is happening, y'all? Today I have the pleasure of having another fellow Canadian in the lab, so it's a special one. And I made a promise. I told Andrew, I'm like, listen, knowing who I am, I'm gonna go through a whole deep dive bio and leave the listeners hanging, and you're not gonna have full context, because sometimes I'll do that and I'll say, yeah, we were talking about that offline. So I figured right now what I'll do is we'll just hit the record button. We'll get going and we'll get right into it, because not only I have a fellow Canadian, but I have another fellow gentleman. I don't know that you know this, Andrew, but I also have a tech background. So now we're kind of twinning a little bit. And I love having or being able to create solutions for a marketplace that is continuously going to be investing. They're going to get more out of their properties, but being able to provide shovels during a gold mine has always been something that I truly admire. So when I believe you have tech and real estate together, some beautiful things come together. But without further ado, as the co-founder and CEO of Share, an end-to-end investment platform, which is super interesting, that specializes in single-family rentals. And again, you combine that background that you had with technology, entrepreneurship, and understanding of real estate, and you created Share. So welcome to the lab, my friend. How's it going?
Yeah, thank you. It's great. Things are busy, but can't complain about busy. And yes, it's awesome to be on the show with you.
I know, man, all the way from Brampton. And so I didn't tell you this, but I grew up in Hamilton, Ontario.
Oh
And
man,
so you know how it is,
that's
brother.
close by.
And it is close by. And I was just telling you, I was just visiting Toronto. So I was gonna ask you, Toronto, and then what happened? You just drank the Kool-Aid in the Silicon Valley, and you just decided to create this company. Like, walk me through
Yeah,
who was Andrew before, the
yeah.
Canadian Andrew before he was CEO of Share and all this jazz that you've been up to, which I'm very interested of hearing. And before you had your personal portfolio of single families as well, which I'm excited to hear about what that looks like. Who was Andrew before that, man?
Oh man. Okay, so child to Korean immigrants. I was born in Canada, and my parents were hardworking immigrants. Grew up in low-income housing. They had quite a few failed businesses, so grew up pretty hungry, pretty ambitious. I would say I was pretty privileged despite coming up from a poor family. I think,
Hmm.
they spend way too much money giving me good education, extracurricular, and that eventually resulted in bankruptcy at a young age. And it was like a very traumatizing moment, when your parents pick you up from school, whatever, and there's like duffel bags of clothes in your car because they're worried you're going to get evicted. So that really kind of put me on the trajectory of like I never want to be in that situation.
Wow.
And I think there was like always this innate understanding, and maybe it's just media and I just didn't pay attention, but real estate always being the great safety net. Millionaires make their wealth off of real estate, and
Mhm.
somehow that got into my head as a young kid. And I was always ambitious, entrepreneurial, but knew I had to make some calculated risks. And those two kind of themes kept with me throughout my childhood, throughout school, all throughout high school, university, always running some sort of business on the side. And then I was always interested in tech. And that's kind of what was my main career focus was technology. So straight out of university, I'd started to get into real estate while trying to pursue a career. And, I was buying homes around Toronto. At the time, this was like 2010. You could buy a home for
I
like
was gonna say
three.
buying homes. Did you just say buying homes in Toronto in one sentence? Like, is that what I heard?
Yeah. Yeah. I
Wow.
mean, the average home now for the listeners is north of $1 million for a single family in the city.
Wait,
Um,
so let's talk about that for 2 seconds because I can't let this one slip through the cracks because timing is everything. So you
yeah.
bought these homes back in 2010. I'm assuming based on what you're saying, because I'm talking about the entire GTA. Like you start going
Yes.
out and like you can't even buy decent homes in Hamilton for pennies on the dollar anymore, right? So what
Yeah.
has that been like? And talk about what you've seen. Like, have you seen huge equity growth in some of those properties? What does that look like?
Yeah. So this was like 2010.
Yeah.
I had saved every single penny from every single side job, hustle,
Mm,
part-time job, summer job, and was getting into like the outskirts of the GTA. So, um, you know, Ajax, Barrie region,
yep.
and
Yep.
that's probably what, like 50 to 60 miles from the city.
Wow.
So out there, and at that time you could get like a foreclosed home just shy of $300,000 Canadian. I think at that time the dollar was almost at par with the US. You do the whole burr thing. I was not good at it, but I knew I had to stick with it, and a lot of mistakes there. I should have probably got a mentor, should have got a lot of different things. So I did two properties and was then also focusing on my professional career, which then segued into my first venture capital backed tech company. So before that, again, through university, doing odd end hustles, building little tech products, I was coding websites and stuff like that. But this one, we were actually backed by venture capital firms. We were, let's call it the Shopify for YouTubers, allowing
Really?
YouTubers and content creators to monetize their audience with commerce. So at that
That's
time,
pretty early, man.
it was, we like, yeah, there's a lot of FOMO on that story. There's, yeah,
Ooh.
holy smokes. And we'll get into that. But yeah, we were early. So at the time, YouTube was a lot easier to grow an audience, but you couldn't own them. There was a paywall on messaging them for every 1,000, and you couldn't use affiliate links in the comments. So think about all the DIYers, the cooks, the makeup artists, and
Right.
everyone's sending free traffic to Sephora, Amazon, all these sites. And, these are individuals now. Some of the first YouTube channels we worked with had like 5 million subscribers. They had more viewership than like Jay Leno in certain times,
It's
and they were
crazy.
all working a full-time job and making less than $100,000 on ads. But then, they're pushing people to their .com where they can release the videos a few weeks earlier, and now they make $2 million a year on t-shirts. So like that was like an imbalanced equation.
It's crazy.
So yeah, so we are like, why don't we make like a website builder for YouTubers where you log in with your YouTube credentials, we port over all your videos, and now we put a shopping cart on the right hand side of your video player where every time you talk about a different product, it shows up. We go out
No
and make like drip
way.
cans. Yeah, so now
What a
people
great
can make
idea.
transactions. So we were backed by some top tier investors. The COO of YouTube was an investor in our company.
Excuse
We're
me? Hold on, hold
Yeah,
on. You
yeah,
can't just say that so passively, man. That's incredible chops that you have here. See, I said
yeah,
Silicon Valley, but I didn't know what I was getting myself into. This is
yeah.
so you
This
guys,
was
so you
LA. So
got
this was LA first. We were in
this.
LA at this point,
Yeah, okay.
2011.
So this is LA. So this is what phase of your life? You were at York for a bit, or was that like
Yep.
and then
Yeah.
you graduated? What would you major in? Like, because you said coding
Uh,
developing. Was your
yeah. So
background?
I was originally IT, and then
Uh-huh.
I moved to business because I just couldn't. I was me coding all day was just getting pretty boring.
Yeah.
So I couldn't see myself coding or being behind a command line. So
I
I'm
don't
like,
see it
I'm
either,
I want
man.
to
I
go.
see
I
I
want to
see
be
a
on the business side.
visionary. All
Yeah.
right.
So I wanted to be on the business side. And then like there's a bit of a gap there that I worked, helped bootstrap this other company called Cognitive Marketing, which till this day is huge.
Oh, I know
Um,
them. Yeah.
yeah, they're the ones responsible for the one people selling you credit cards in like Canadian Tire and all these retail outlets, and they've got all the tablets. And yeah, so that was like our first business, and that was bootstrapped. And then I was like, okay, getting married, gotta kind of settle down a bit. And then I know we're jumping all over the timeline,
No,
but
this
I
is
was like,
this
okay,
is this is I need this. This is amazing. I love it.
yeah. And then like on my honeymoon, I was like, I got married, bought a house. It's a good job. And then my business partner from the previous company was like, hey, I got this idea. When you come back, let's talk. And I get back, we start talking about this business, which was like the YouTube or Shopify for YouTube. He's like, are you in? I'm like, man, I can't quit. Like, he's like, don't worry, we'll go raise some capital, then you can quit. And he's like, so are you in? I'm like, yeah, we're in. Let's bake this a bit more. He's like, good, because I'm off to California to raise some capital next week. And I'm like, oh, okay. So now a few months pass. I take a lot of vacation days to go out there, help do the fundraising pitch and be investors. And lo and behold, we raised like $1.6 million.
Wow.
And now I'm quitting my job, leaving my wife and my new house, going to LA, moving to LA because a lot of the venture capital money that we got was from LA as well. Because, if we're in the YouTube space, YouTube was pretty fresh and starting
Yeah.
to take away a lot of viewership from TV to YouTube. So now we had some of the largest like figures of Hollywood, like WME, like a talent agency, Charles King, who was like the head of Urban, former head of Urban. You think Tyler Perry, all these people, like he was the
Wow.
top of the management. Charles King, Google him. He's now Mac. He's the man. Had some of these top A-list, media types like come out to LA, you're gonna build it here, we'll set you up with talent. And so we up and left and went there. And that's how I kind of got introduced to the US single family market when I first got out there. But then I was just all consumed by building the startup that I couldn't focus on real estate. So bought a portfolio, then focused on the startup, was heads down, and then eventually got acquired by a company in the Valley in San Francisco. So then I had to move up there. And that was a bit of a roller coaster too. So after that, did a stint up there, didn't like the direction the company was going, and ultimately decided to quit to leave and start another company, but realized my visa was dependent upon me staying there. So they kicked me out of the country, unfortunately.
Brother, I've been there too.
Oh
I just got my green card like a month ago. Like I know what it's
man,
like.
congratulations.
Yeah, I know the
Congratulations.
struggle, man, because like I've overstayed and I got
Oh my
I got issues.
gosh.
So that's hilarious because I'm really appreciating like the small details that people don't appreciate. Um, Tell me when you were working, because I got a sense that there was like a startup, but then you said you got acquired. Was that through the startup or was that,
Yes.
and you were a W-2 at the time or or a co-founder? Okay, help me understand kind of just so we kind
Yeah.
of know where you were at in your phase of life.
Yeah, so the company that brought me out there was mine. Well, mine and my co-founder. So I was the co-founder of that. It
Yes.
was called Kingmaker. It was a stealth company. So we were building behind the scenes, and then it was acquired by a company called Joyous, who wanted to use our technology, and then and use it for their own purposes. And at that point, became like a W-2 employee. And I had to stay there for a few years to get the rest of my stock. So I was
Excellent.
just like,
Was that like an
oh,
earnout essentially?
yeah. It was a mix of cash and then stock, and the stock had to be earned out.
Dude, I
Um,
love your story. This is
yeah,
awesome. No,
life
I
changing cash, but not like retirement. Definitely not retirement.
was it six figures, seven figures, six?
Seven, yeah.
Dude, good. That's good stuff. I know now you're on a different trajectory, but that's, you know,
Yeah.
I know that's a good cash injection.
Yes, yeah. Pay off the mortgage, and then good
Wow.
thing I didn't go and ball out. My wife
Ball
was like,
out. Yeah,
chill
really
out. She
smart.
was like, chill out. No, like we're having
Yeah.
kids now. Like, don't be stupid. You're not young. So yeah, I didn't I, was a modest amount, paid a mortgage, but still like I can't be overspending, gotta be very frugal. And then I didn't end up earning out because it was just a bit much. I just had when we got acquired, my wife was 8 months pregnant.
Oh my God.
And she was already going back and forth from Toronto to LA, Toronto,
And
LA.
that process on its own, Andrew, is like people think it's just like you sign on a dotted line. Like they're doing their due diligence for like months and months and months, right? Like
Yes,
it's just
yes.
not a process that it sounds nice when you like have achieved it, but it's like they take you
Oh,
through the
it
right.
was horrible.
Yeah. I
It
heard.
was, oh my God, it was horrible. Like they're like, why don't we work together for a few weeks? You bring a team up there. Let's see if there's a culture clash or whatnot. I'm like, I'm going to pick up my whole team and fund them to go to San Francisco. And now we're talking San Francisco at the time is like $3,500 for a 1-bedroom apartment
Oh
for a
yeah.
month,
Yep.
right? I've got a team of like 7 or 8. Um, so, oh man, that was crazy. So we had to move the whole team up there for 8 weeks. We're running out of cash at this
Oh
point.
my
We're like,
gosh.
just buy us already. Like,
Yeah.
let's get
Oh
this
my
deal
gosh. Can you
done. And
imagine?
yeah,
Oh,
and then driving after doing like 12 hours in the Bay Area, then go back, settle all of our state, our office, and then drive back in the same day. It was just like nightmare. It was horrible. My wife is 8 months pregnant. Now she's stuck in Canada. And like I don't know, like after I sell the company, I definitely don't have control over my schedule because it's a high growth startup. So I'm doing 14-hour days, 6, 7 days a week.
yeah. And
My
yeah.
wife is gonna give birth any day now. And I'm like, I got to take off and go back to Canada and then bring her this newborn with me back. So it was a lot.
Wow.
It was a
See,
lot.
see what I appreciate there, Andrew, though, it's the process behind these things, right? Like you see exits, you read about them, but what I appreciate as a business owner myself, and I didn't have a successful exit, but I was a lot of lessons learned,
Tons.
is it's the process, right? Like
Yeah.
it's the process behind, and I think people usually see the apex, but they don't see the driving back and forth. They don't see the your wife
Yeah.
being outside the country with your, potential newborn in on the way, and like but I love that because that's that kind of like that's the story that you get to share with us. That kind of
Yeah.
really helps us understand. Okay, how did we get here, right? And
Yeah.
kind of you earn those stripes. So I want to give you kudos, brother. This is
Thank you.
amazing.
Yeah, look, I'm on the same page. I always tell everyone, I'm like, before you go and do anything crazy, go find a million horror stories, stomach the horror stories and say, like, yeah, I can actually stomach that horror story, and then go do it. Right.
Yep.
Like
It's like
everyone
what
always
what
sees the
pain are you
success.
willing to deal with for
Yeah.
on the other side of like that thing that you want, right? If it's VC, it's like, okay, are you willing to have, like, these guys are gonna give you money, but then you got to give results, right? And then it's like the
Mhm.
same thing if you're a syndicator, if you're building tech. So fast forward. So when do you start with all this? Like, it's hard enough to be in tech. It's another thing to be co-founder. It's another thing to be VC backed. It's another thing. At what point do you get property number 3, 4, 5, 6, 7, 8, 9? Like, was that another exit that I don't know about? Or was that like, as we're building, you paid off the mortgage when you got that 7-figure exit, you didn't go crazy. Did you begin investing then? Like, what was that story like to give us a little
Yeah.
context for us listening?
So yeah, to kind of rewind, I ended up selling my Canadian homes that I bought, and then deploying that in Florida. That's when I first moved to California, and that
Why?
was sort of just because of the rates of return, like the cap rates were high, and I could one odd thing, a major thing, and you see a difference between like Ontario or Toronto cap rates versus like most of the U.S. markets that you would look after. There's actually a line of property management in there. And in Toronto, everyone assumes you're going to self-manage because it's like you're going to be negative cap rates.
Oh, that's so funny. So
Yeah,
they just kind of take it out. Another thing too, Andrew, and correct me if I'm wrong. From what I understand, you're kind of forced to refinance every 10 years in Canada?
every few years, like yeah, the mortgages are short, very very short.
That's a luxury that we often don't talk about enough that we have here as Canadians. When
Yeah,
we come here, we're like, dude, like
yeah, 30
I just
year.
locked in for 30 years. Like, what is
Yeah,
that?
it's
Like,
like yep, set it and forget it. But yeah, so I sold those Canadian ones, deployed it across Florida, and then certain pockets of upstate New York, and that was sort of the end for a long time. So that's 2011, and now I get kicked out of the U.S. in 2015. When I come back, it's like right before winter, super bummed out about that because I didn't no intentions of coming back here. And then I'm like spend about like 6 to 9 months spinning my wheels trying to think of my next big thing. And then I had nothing. And then a friend of mine that I was trying to poach in Toronto for my friend's startup in Toronto said, hey, why don't you come work with us? Meet the guys who run this division. They're looking for startup operators and they pay like top of market. And I'm like, well, I don't really want a job. What is it? He's like, yeah, it's a Loblaw companies. And I'm like, I go from startup to the largest retailer in the country. So the VC pitch I always give to everyone is like Loblaw is the CVS, Walmart, Kroger bundled into
oh
one.
yeah, oh yeah, I know Loblaws.
Yeah,
Yeah,
yeah, they own 60% of the retail dollars. And at the
that's
time, didn't have
wow.
Yeah, it's wild. So what they have is like an Amazon-like supply chain, but no e-commerce presence. You couldn't buy a single thing of theirs online. So they were looking for startup operators to start this new division that they called Loblaw Digital to build an omni-channel platform. So buy online, pick up a store, or deliver from store to home. For grocery, their apparel line, for their pharmacy line, everything. So I'm like, I don't know. My wife's like, you better go because I'm sick of seeing your face at home doing shit. Like, oh, sorry, I didn't mean to swear, but like, it's like you're doing nothing. You're spending money. You're staying home. Go make, contribute. You got kids, so go do something with your life. And so I ended up taking the job. And it's funny because the guys who run that division are also ex Silicon Valley guys,
No
um,
way.
all ex like tech startup, Waterloo, hit the valley, had their
Really?
life. So they're strumming the strings. Like, you don't have to go raise capital anymore. You got the largest distribution network in the country. So now when you deploy a product, everyone's going to test it. You're going to get paid well, large vacations, 9 to 5, whatever it is. So I'm like, you know what? I could choose, I could take a bit of a change, but I still worked like 14 hours. Maybe it's in my nature, but still worked a lot. So I
Yeah.
joined that team really early. It was just launching their first product, but now we went from zero to over $2 billion worth of annual transactions in 4 years. So that
Wow.
was like a lot of work for us. But I held one of the largest sort of operating P&L lines, which was a great pleasure. But as it got so big, it became very bureaucratic, and I was like, not fun anymore. So I quit in like 2019. And then I'm like, I'm going to do another startup. My wife's like, sure. Now we have 3 kids, right? Now it's 3 kids. And it's like 2019. I'm like, it's Christmas time. I'm like, yeah, I'm going to focus now. January comes. I'm thinking of my new ideas.
What's that?
Pandemic.
Oh, that of course the pandemic. Why do I always forget? Let me hit that pause button real quick because we'll pick up right where the pandemic picked up. But I'm just curious when you're going through that transition from startup to another idea or ideation or next phase, next season of life. It in Are you doing that in like sprints where you're saying, okay, for the next 3 months, I'm going to think of what's next? And if so, when you're doing that, what is it that you're doing to get inspiration, insight, market study? Like what's happening during those periods? I'm just curious. A guy like you,
Yeah.
it sounds like you're very strategic in what you choose. So what happens in those phases that, might be helpful for us?
Well, you just totally unpacked a story that I was glossing over because I thought it might be too long. But in my last year of Loblaw, I was moonlighting a product. I had come up with this idea. Like I mentioned before, I was always kind of hustling, had all these different things. Part of this, I actually got into the sort of white label Amazon world.
I
And
know
I've
that one.
been exploring that. And like I found a product that was generating pretty good cash flow, but like to build an Amazon product, you constantly have to kind of be on top of things, run your ads.
Yeah, my
Um,
my
and-
my roommates, by the way, sold their business and a fulfillment by Amazon business, so very familiar. And then we started an e-commerce business, so I know what you're talking about, brother.
yeah. So like I was like, you know what? I need something to monitor my ads and change the keywords on a daily basis. And I need to be super discreet while I'm in my meetings. So and I'm going to say this out loud now, but me and a couple of these other Loblaw engineers, 3 of us, like 4 of us, I had 3 top-tier engineers. We built a Facebook Messenger bot that would actually siphon and create all your ads and give you updates on a
Wow.
daily basis, and you can adjust everything via chat.
Nuts.
Um, and then that was the business that I ultimately wanted to go into and quit. That's why I quit Loblaw. I was like, I'm going to build this business. On the weekends, I was doing trade shows, conferences, hustling that. But then I swear within the first few weeks of me being unemployed and me spending more time in the business, I realized this is not a big enough business for me to really hang the hat on. I'm going to
Context,
have,
context. When you say big, because I think it's important. What are you looking
yeah,
at? Like, and I'm
venture scale.
specifically, yeah. It's
Yeah.
funny you say that. 'Cause I love this conversation because I had a buddy went to Stanford, started a business, and he was, he's going through these pitches and stuff, and he's like, Ruben, the feedback that I'm getting, and he had to shut it down. He said, feedback that I'm getting, it's a good idea, but they like ideas where they can swing for the fences. They like things that can 100 to 1000x, right?
Yes.
And so
Yes.
they're not looking. And so when you said big, it kind of like struck a nerve, because it made me think of that. Like big is all relative, but when you say
Yeah.
big, it's so that it can get to the potential scalability of, I mean, billions.
Billion
Who
dollar
knows?
status. Yeah.
Yeah, right.
Yeah.
Is that what
Yeah.
we're saying, right? So that's kind of like
Yeah.
you kind of in retrospect, you had that insight. You're like, I don't know. You've been in that world, you've been on that side, and so you had that level of
Yeah. And
awareness.
because like, yeah, in my mind, I was going for a venture-backed business because I knew like having some startup capital is always beneficial. And the only capital I knew how to raise is for sort of venture-backed businesses. So the criteria is always the same. It's like, can you be $1 billion company in 5 to 7 years? And is
Wow.
the market big enough and can tech get you there faster? So that's yeah. And like
In a
if I
nutshell, that's the criteria.
yeah, yeah, exactly. Can
Wow,
you think about Uber, think about Airbnb, it's
that's
like, look, there's
crazy.
a big opening there and tech is you to wedge you in there and we can keep throwing money at it until you get them, you own the market. But
Wow.
yeah, and like even like the market for the Facebook selling was just kind of starting to take off and or sorry, the Amazon selling just started taking off. So I knew there was a lot of education components and I'm like, I'm gonna be the frontline sales for this sort of $15 monthly subscription for a long period of time. I'm like that's a very long period of time doing the numbers. I'm like, in order to pay myself X number of dollars, I've got to get this many users, and this is going to take a long time. So that's why I said, okay, hey guys, I know I said it's time for me to quit, and I was the first one to quit, and I was saying I was going to raise capital and pull them out. I was like a couple of weeks
Oh,
in, I'm like, this is the wrong idea. This is the wrong idea, and it sucked because now I'm unemployed. Christmas is here, and I'm like, I have no idea. And then I went into ideation mode, which was to your original question, jotting down my whole day. What are the major problems that I seek? Speaking with other subject, and because I'm a generalist, I don't have a hard background. I don't have a science background. I don't have like a deep expertise. I've just got soft skills of I'm a generalist and I'm an operator. So I go and speak to other people that have subject matter experts in their specific fields. One might be a musician, one might be a tax accountant or whatnot. And I'm asking, what are the problems you face on a daily basis? And I'm just writing down a million problems a day, a million problems. And then I try to find one problem that is like universal amongst everybody, and there's a big enough audience for that has the same problem and that there's no solution for it, then I start clicking into that.
wow.
Yeah, so that's typically the problem. Like my process is identify a problem, make sure the problem's big enough being again enough demand for billions of dollars, and then what are the solutions out there and why aren't they good enough?
Who is the, because one thing I love is like who, not how type thing, right? So when you go to the problem, are you approaching the common man? And I say that in quotes, in air
Yeah.
quotes, as if you're listening to this, I'm thinking like when I say that, I just mean like everyday people problems. Like, man, anytime I pull into the driveway, this happens. Or is it specifically, no, I'm going for subject matter experts because it'll be very niche. And I know that niches are riches are in the niches. Like, what is the approach when you're in that ideation, when it's at a 1,000 foot level, and how do you zoom in?
Yeah, so because I'm a generalist and
Mhm.
my whole career has been on consumer products, I would go to the everyday man, but find, or the everyday person, but find sort of the right prototype of person, maybe who's got like expendable income, who is maybe your more normal average person. And but I would still go to a couple of subject matter experts to see if there's something big there. But like subject matter experts are often going to give you like business to business ideas. And if
Mhm.
I don't have that pedigree in that industry, it's harder for me to build trust to, build that venture
Penetrate.
capital business.
Yeah.
Yeah.
Yeah. Or at least you're
Without
gonna
that
have to have
subject
someone in
matter.
your team that is from that cloth. That's a subject matter expert.
Yeah.
What's the question? I'm curious because I'm a curious person. So I'm curious as to what is a question that you ask that you feel can unlock a lot of like almost like spilling out like the issues or the that they're facing. Is there a go-to question that you ask?
I don't have a go-to because oftentimes when I'm asking, they don't really have the context of why I'm asking. They're like, why are you asking? To them, they're like, stop asking me so many dumb questions. Like, why are you so in my business? I'm like, look, this is the context. I'm trying to unlock a problem for a business. So tell me what your biggest pains are. And then I typically have to guide them. Like, look, think about it from a dad perspective, a husband perspective, a chauffeur for extracurricular perspective, the financial advisor of your family perspective. And then all of a sudden they frame things. Oh, you know what I hate? You know, every single year when I've got to do my taxes or whatever, my stocks, I have no clue what's going on. My financial advisor gives me all these documents. I don't know how to analyze it, and he doesn't give me the time of day to sit on call. And like now it starts spilling, and then
I
you
love
kind of
that.
just double click into the pain points.
Yeah, I love that you said the word framework, because I think that's how most humans can, you know, interpret, like, the interpretation between concepts or through frameworks, or
Yes.
how you digest. So that's, see,
Yeah.
there was a way that you asked. I'm glad that I asked.
Yeah.
You said it. Okay, so that is very interesting. So you told me about the ideation, which is interesting. You're going to the common person and you're specifically asking them through your frameworks. You kind of level set to get ideas, and then you kind of just go for it. It sounds
Yeah.
like, which is very
Yeah.
interesting. And I'm not surprised, because I do see that action takers are money makers. So
Experiment Nation, you've heard the word MTR, Midterm Rentals, as it is currently a hot topic and hot commodity right now because, again, there has been an increase in short-term rental regulations, and there also has been, let's face it, a slowdown in what we were experiencing a couple years back when it comes to bookings. So with that said, short-term rental operators are looking for alternative solutions to tap into the midterm rental space. However, there is a sub niche of midterm rental insurance that I'm truly excited about, that I want to share with you, that the experience that we've had, the tremendous results we've been able to have, and that's the insurance midterm rental space, which is very different than your traditional midterm rentals. When you think of traditionally midterm rentals, you think of travel nurses. There is a space, midterm rental insurance space, that we've tapped in, where you need to be well connected with insurance and relocation specialists and companies and understand the right type of asset required for you to be able to help these families. What's really important that stands out the most, which you can get in what I'm about to offer you, is the understanding where to be found by these insurance companies, how to properly manage your calendar so that your listings are optimized so that they can find you, how to actually gain traction and build a relationship with these relocation insurance companies. I've put together an MTR insurance blueprint. That's double MT triple R insurance blueprint to cover these foundations after we've had success landing very large contracts on single family homes that literally 4x what we traditionally make in long-term rentals, and also gives us peace of mind because there's less turnover and 100% occupancy, because these contracts can start anywhere from 30 days to 3 months to 8 months and range anywhere from, again, we've landed anywhere from $8,000 to $9,000 a month in per month on a single family home property, which our mortgages are typically around the 2,400 range, which then gives you a large spread of anywhere from 4 to 6K net on just one property. And this is why it's very hot right now. But people who haven't been in the lab with individuals like myself, like Jesse Vasquez and Dr. Rachel Gainsborough and Noble Crawford, don't have the foundations and don't know exactly where to start. And therefore, this is why I'm giving you guys a blueprint, the MTRR insurance blueprint. Go to the website, experimentrealestate.com, and get yourself a blueprint to completely change, or at least have a plan B if you're a short-term rental operator looking to maximize your occupancy and profitability. We'll see you on the other side.
tell me, where does share fall into place?
Okay. So I guess this picks up where the pandemic left off.
Yes, 2019, 20. That's right. That's where
Yeah.
the pandemic happened. Yeah.
So pandemic happens. 3 kids are at home. And I was like losing my mind. I'm like, I'm not going to be making money for a very long time because these kids are stuck at home. You know, I had some crazy notion that I was going to raise capital. I'm going to be paying myself money and I'm good to go. But now it's like kids are at home. There's no business being built. There's no ideation being built. I can't see people, can't talk to people. And this is becoming a problem. Living in California, I created a bit of a wine habit that I wanted to sustain. And for those that are listening, Canadian has, or Ontario, this province of Canada has a lock on alcohol, so that's exceptionally more expensive in Ontario than it is in almost every single state in the US.
I don't think I knew that.
Yeah, so like if I were to walk into a Safeway and get like a $7 bottle of wine, that same bottle in Toronto is about
LCBO.
the Liquor Bureau of Ontario is about like $20
No
Canadian
kidding.
American, or like $15 American. It's almost twice the price. So I was like, okay, I need to sustain myself. Now I'm like, well, what's my cash flow situation? And I'm like, I got this tiny real estate portfolio that looks okay. And I'm looking at it and I'm like, this hasn't increased in rents over the last, like, since 2011. They're paying, I'm getting my checks. And like, I don't know what's happening with my whole portfolio, and why is my portfolio not grown? Why hasn't I think I had some false expectations that my property management company would be like, hey, it's time to buy another one, or you've accumulated this much, it's doing this well, or every single year I'm going to raise rents and do all these beautiful things that I feel like an asset manager would do. So that became a bit of a light bulb moment, like, well, do most people do it like this? And lo and behold, the single family rental market is one of the largest asset classes in the world. It's $4.7 trillion, and 88% are owned by individual investors that have less than 10 units, people like me, that have less than 10 units. So now that's a $3.8 trillion market. So if you're looking for a big market, that is a big market. So I'm like, so how do they typically do it? And then they typically work with a property manager or a local agent, and then they find all these things, and they've got to do all the DIY platform. And what there are out there are like asset management platforms to plug into your property management accounting software to help you kind of do your taxes, but they're not going to be the ones. The software doesn't actively build your portfolio, doesn't actively police your property management, doesn't actively shop for insurance, right? It doesn't do all these different things in between. And that was sort of the light bulb moment for me. And the alternative was, there was another venture-backed company called Roofstock. Top tier venture capital firms, huge, already had raised like over $100 million. But they are exactly that. They are a marketplace. So if you had a single family home with a tenant in it, you could plop it on this marketplace and then try to shop for a buyer. But you're still doing essentially all the same motions you would if this house was down your street. The only difference is you're doing it remotely, which is actually compounds the work now, because you got to find an inspection company, you got to find an agent you trust, you got to find an inspection company, a contractor from afar. So it's even harder. And then what I figured out is that company Roofstock was actually started by one of the founders of the first single family rental REITs. And the way they were generating their money was actually just siphoning all this inventory to large private equity and REIT firms. And that's where 90% of the revenue was coming from. This marketplace was like leftovers for just the consumer. Until this day, they've now just focused on software for sourcing for large institutions, which has perfectly positioned us. So anyways, that's kind of where we were at that moment. And I was like, well, I'm coming from the consumer world, I would want something very secure, very fast and very efficient to deploy capital. So I know exactly what I'm putting into, exactly what I'm getting out. So the first version of Share was us buying the homes on our balance sheet. My co-founder and I literally bought a bunch of homes. We renovated them, leased them out, and then put them on a website for people to buy either a fraction of it or entirely.
And these are traditional rentals, like traditional rentals?
Yeah, long-term, single family. Like, the reason why we chose that one is because it's like your plain vanilla basic entry point. We always say it's boring. It's, modest returns for modest risk, right? So that's why we're like, okay, we'll start with long-term and then graduate eventually later on. We'll see. But the single family market's so big that we could just stay there. So that was the version one: buying, stabilizing, and then selling it fractionally or whole. And then we did a bunch of sales like that. And that's what triggered the first round of venture capital fundraising. We raised 1.6 million plus a $5 million debt facility to buy the inventory. And we started buying, and then the market shift, and then interest rates just start skyrocketing. And now we're getting negative margins on homes that we're buying. And we're like, this model can't sustain.
Wow.
So we had to halt the business. And then we moved away from fractional because we didn't like fractional. We're like, we couldn't argue with ourselves about fractional ownership or like owning a sliver of a single family home. It didn't make sense. We're like, just go buy a REIT. So we moved
Right.
away from that. And then we said only whole ownership, and single family. And then we pivoted the model to no more buying on our balance sheets, strictly sourcing based on your client, our client's preference of, price point, risk, and cap rate.
Could you describe
Um,
what you mean by that, Andrew? When you say you remove the fractional ownership, so essentially before you were buying a home, and then your platform was allowing for those to essentially be shareholders of that one single family property, or like fractional
yep.
ownership. Then you remove that, but then the last comment you made, what did you change it to exactly?
Yeah. So then it went to whole ownership. Then we realized because of the interest rate, we couldn't buy them on our balance sheet anymore.
Mhm.
Us, that holding period alone brought us into negative margin.
Yeah.
So what we did was we said, let's scrap the idea of actually buying them on share and working with the client to understand what type of home they're looking for and then go source the home instead of us buying in advance, putting on a website and carrying the inventory. So we
Who's
went from
who's buying the home though? Is it?
the end client.
Oh, interesting. Okay, so
Yes.
is it a
Wholesale.
who holds the deal, the deed?
Yeah. So the
Who
end
owns the
client gets the
deed?
deal. Yeah,
Deed.
the end
Okay, got
client.
it. Interesting. And so where do you monetize on that?
Yeah, so there's two parts. One is on the purchase. So there's an acquisition fee, and then there's an ongoing asset management fee. So the purchase, we take 3% on the purchase,
Mhm.
and then 25 basis points to 100 basis points every year, on the original purchase value. And then there's still the regular property management costs that we pass through, but that's like a pre-negotiated rates down to like 5%. But we bring all the other service providers to the table, lenders, insurers, everything you need to get going.
Nice. And you guys are you able to get a kickback from those vendors?
Eventually, right now, because of the interest rates are so high, we just forego all of our kickbacks to make
Mhm.
sure that the client is getting the best deals. But yes, eventually, with the amount of the attach rate for every single step of the way, like we do the entity formation, we refer bank, we do their insurance, we do the property management, everything.
I mean, you're the
Our
affiliate
clients take,
king, right? You're this
yes,
is this
essentially, yeah,
you
yeah,
started
and
on
then
YouTube. You can apply that same model
yeah, yes,
to
exactly.
right?
Yeah, so now
Get
it's
that
it's
link.
like, yeah, so it's like, look, as soon as we get critical mass here, I stand up a lending business, I set up a tax consulting business,
Vertically
insurance.
integrated, or
Yeah,
horizontally, I should say.
yeah,
Wow.
exactly.
Okay, so that's interesting. I love that. And tell me about the stickiness. If I buy through shares, there's something in my clause that, and I don't want to use locks you in, but you guys did all the heavy lifting. I can't, I don't want to, you
Yeah.
guys want to create a continuity business type of thing. So how do you create that sticking factor?
Yeah, so we knock on wood, we haven't had any churn to date.
Okay.
But we do have a 2-year lockup period.
Oh,
But the
nice.
2-year lockup period is more like we just want to be made whole on 2 years worth of asset management fees.
Yeah,
Because we do front load a lot of services, and
100%.
2 years is sort of a recoup. And then yeah, if they want to break it ahead of time, we just prorate the amount. But it's the client's home; they can choose to do what they want to do with it.
Yeah. Well, I see, and again, I know my mind is going where, as a business owner, but as far as obviously having a good business is offering a good product, and where I see here could be, one stop shop, right? People love to just, if I can go with these guys and give me a lender and they can give me the management, they can give me that, like I don't have to shop around. They're vetted and it's integrated. I think that's sticky enough to not want to, like, we're in that short term slash midterm rental space, and like I think one of my partners asked me, why are you still using this property management software system, PMS, right? And I'm like,
Mhm.
because it's sticky and I'd have to uproot my entire thing. And I love that. And I didn't say it because it's sticky, because it's like, because dude, I would have to have a real reason. It have to be one or like critical features that I'm
Right.
dying to have to get me to move over, because this is how we've grown our portfolio. So I like those businesses where it's like, there's more friction to leave
to
than
leave.
there is to like. Yeah, I'm serious. I mean,
It's well designed.
it's well designed, right? I mean, that's how it should be. And obviously, with that said, it also has a lot of integrations that work with other softwares, which makes my life easy. And they're working on more integrations. So like we want that. So it's also it's great to hear uh that when the service is earned, the client will stay.
Yes. Yes. Exactly. Yep.
Love that.
Fully integrated.
So those the properties that you have, so I know you went from like okay ownership to like and then you had gone fractional and you're like never mind going back to sourcing for the client for yourself. Did was I'm sure you get, what I love about tech is you get a lot of data and you kind of almost maybe can learn through your clients. Is there anything that you've seen or areas that you've doubled down in, and or what did investing on the side look like for you? Or is it right now all of share, or do you continue to also invest periodically, like dollar cost
Yeah.
averaging, for lack of better words?
Yeah. So I would say probably could have been a better investor pre-share,
Mhm.
learning that maybe convenience isn't the best option, and that yeah, don't invest in landlord friendly states.
Mm.
So so yeah,
What
and
do you mean by that?
diversify. So like have a good chunk of my portfolio is like is in upstate New York. Let's call it
Oh,
you
that's
know
tough.
D class. Yeah, so Niagara Falls
Mhm.
area, right on the border. New York's not the most
That's
landlord
tenant
friendly.
friendly. Yeah.
Yeah, not exactly more landlord or like tax friendly by any means, right?
Yeah.
But my agent, who also had a property management business, had an operation there and in Florida. So I was like, I'm going to diversify, and I can diversify through him. And I should have probably done some independent research and say, hey, like New York wasn't the right path for me, and then maybe diversifying across classes, because like I was heavily skewed into like C class when I should be going into some Bs, some As in different states.
Mhm.
So definitely a learning curve, but now kind of making, writing the, course correcting and
Yeah.
using share to pick and choose the markets.
Oh,
And now
that's
that
cool.
you're in Georgia, right?
Yeah, so we're in
Atlanta?
Georgia and yeah, or Metro Atlanta. So our niche, and you might get a kick of this, is we specialize in
The midterm,
corporate
right?
housing. So
Yeah, okay.
essentially, it's like when a tree falls on your home and or a water damage happens to a policy holder, they rely on their insurance company to find relocation housing for them. And if it takes 2 or 3 months, even six, the insurance company is paying us a premium. So we fostered a relationship with these insurance and relocation agencies, and we essentially have Airbnbs for corporations who are looking to relocate their displaced policyholders.
That's a good tenant profile. That's a really good tenant
Oh,
profile.
it's a good, it's very
Yeah.
good because they don't pay, the corporation pays, and they
Yeah.
send they just wire us the money up front, or peer obviously monthly
Yeah.
but on time. You don't have to chase anyone. And yeah, we have our contracts baked where it's like damage or anything like that is just covered. So
Nice.
it's a really good niche. I have actually a thing I'd like to talk to you about offline.
Yeah, we should.
Because yeah, I got a thing that I'm building and behind the scenes that I'd love to, since you're a seasoned tech
Yeah, would
investor
love to
as
chat
well.
about it.
Yeah,
Yeah, would love to chat about it. I'm in Atlanta often, so I'm gonna come check you next time I'm down there.
for sure, for sure. Do it. It's a great. I'd love to continue to keep the lines in communication open, brother. This is
Yeah.
interesting. What's next for share? Because I can see the sparkle in your eye from here. And you got that. Your track record shows that the best is yet to come. So what's next for
Yeah.
share?
Look, it's we're about to close another round of fundraising.
Mhm.
We weren't really planning to fundraise, but after the last sort of business model pivot, which was like Q3 2023, where we went away from buying on our balance sheet to strict like platform of being able to source and manage, our throughput has gone up, and we can actually scale a lot faster that way. So our existing investors were like, well, look, there's a bit of a stigma in the real estate world, and specifically around real estate tech. It's not exactly the hottest market right now, unless you're some sort of generative AI company. And I'm not going to lie about being a generative AI company. So they're like, look, why don't you just raise a little bit of money and be opportunistic and take advantage of the traction? So we've managed to raise a bit more capital, so we're going to be going much faster now. And yeah, we work with clients to help them source. Georgia, I love Georgia. I think for me, I'm very bullish on Atlanta personally.
Yeah.
I think it's like that's where I've been deploying, and I think it's probably one of the top markets. It probably is the top market, from my opinion, for the single family market. And yeah, looking to really just work with a lot of our partners. We have a lot of strong strategic alliances, but we haven't been able to utilize them yet. So that's what I think the back half of 2024 and 2025 will be, is now to kind of open up some of these floodgates and see how fast we can go.
That's so crazy, because I told one of my business partners, and he's one of my best friends, is we always have like the themes. What is your theme this year? And it's so funny you said that. I said, strategic partnerships. That's what I told him for 2024 is strategic partnerships, which is fascinating to hearing that from someone else who's looking to do some pretty interesting things. I want to ask you though, because I heard you say this. I want to make sure I didn't mishear it. Did you say that there is being in real estate tech is not a growing sector, or what did you mean by that?
Yeah, it's not exactly like the hottest topic for venture capital dollars right now. It's not like the hottest.
What's hot right now? I'm curious.
AI, artificial,
Okay.
so yeah, everything
Yeah.
AI. If you have like an AI at the end of your name,
yeah,
like, I'll take a meeting.
You're hot. Yeah. That's so interesting, isn't it? I mean,
Yeah.
especially because AI has been around for a minute. It's just been.
It's just
I don't
a
think
new
people know that.
form of generative.
Yeah,
That's what I said. I was like, look, we have AI, but it's traditional, like machine learning, natural language processing. It's not
that's
like
been
your
around
chat
for years,
GPT.
by the way.
Yeah. So I'm like, look, I'm not going to try to sell the hype, and we're not generating AI. We're not generating custom language on the fly or custom images or videos. But we are doing it for pattern recognition and how to actually, draw insights. So traditional machine learning, but not like generative AI, which has captured the world by storm right now.
Hey, listen, I know another savvy investor by the name of Andrew Wilkinson. He's a Canadian. He says that perception is reality. So whatever you got to do, if you got to throw a little AI in there. Hey,
oh,
listen,
I hear it. I hear it all the time. My investors are like, look, man, you mean you're an AI company, right? I'm like, no. It's like, you mean you're an AI company, right?
Yeah, right.
So, yes, I'm an AI company.
100%. Tell the people what they want to hear, man.
Yeah.
There's money on the
All
other
you gotta
side.
say is you're utilizing AI.
Yeah, AI.
I'm like, okay, fine.
Yeah, utilize AI every day, but no, 100%.
Yeah.
I'm telling you, that's so interesting, isn't it? Right? What a time to be alive. If you're, I'm just curious. So we talked about kind of, we joked around a little bit about our travels here and there. And I always like to say, so let's say you're at the airport, you're sitting next to somebody, and they say, "What do you do for a living?" And you're telling them about share in simple terms, or to um in layman terms, what do you say? What is your USP, your unique proposition, right, that you have compared to others? What do you bring to the table that others don't?
Yeah, so I guess there's two. It depends on how savvy that person is. If they've, because I always see two types of people come through our door. One who is like, I don't care for direct ownership. I'm all just invest in stocks and REITs. And then there's, oh yeah, I only invest in real estate, hard assets, mine directly, not through a REIT, because I want all the upside. So there's typically two. So on the REIT side, I always give them, look, we're accessing institutional investments and service providers for retail investors, so that they can keep all of the upside for a flat management fee. And then they're like, oh, I get that, because they get the institutional asset management component. And what we unlock is all those institutional service providers and investment deal flow that never hits the retail world.
Can you elaborate on that a little bit? Because I hear it, but what is that? That like, my foaming out the mouth a little bit. It sounds juicy. What does that actually entail when you say that?
Yeah. So I guess there's a few major buckets. One is the deal sourcing. So because there's a lot of like publicly traded like REITs and large private equity firms that are in the single family rental world, they turn over and recycle their homes and portfolio on a rolling basis. Like 20% is getting turned over every single year in a 5-year cycle. but they look for partners to sell that inventory to, and they don't typically like evict, renovate, and put it on the MLS. It's too much work, too much
Oh,
investment. So now they look for people who are like large institutional wholesalers or buyers where they can kind of sell the asset as is or at a discount because somebody's going to come with all cash or has a lot of buyers. Now we can tap into that market and actually get those amazing deals and offer them at a discounted rate to our clients. So that's what we call like a lot of institutional inventory or deal flow. Also, there's a lot of developers out there and a lot of wholesalers that source deals just for these large institutions because these large institutions like Blackstone are trying to hit their $1 billion deployment target in like 2 years. So they've got to find all these fast ways to get discounted deals. Now we look like an institution, so we get a seat at the table. So like, I don't know if you heard of Lennar, but we're working with them. We can get some of their build for rent homes. So like pre-construction homes that typically again go to these REITs, Blackstones of the world, and now we're
really?
offering that to our clients.
So how
So
many? Just this is so good because I'm so glad I asked the question because I got a whole kind of lifted the hood there. How many the share would? How many are you buying? Because from what I understood is you're sourcing on behalf, but that sounded to me more like at the individual level. But now I'm hearing it sounds
yes,
like you can also. Are you also doing bulk?
yeah. So we will kind of like we'll lock it up in bulk, but then we know we have customers for each. So say we lock up
Wow.
10, we're like we know which 10 we need because we have customers we're sourcing for those 10, and
Is
then we'll
10
just match
enough,
that
by the way,
contract.
to be at the table?
Yeah, yeah, certain like as long as you get your foot in the door, they're always looking for people to do deals, especially in this market. The buying is slowed down just because inventory is scarce, and the new construction world is kind of slowed down a bit. The buying because the institutions have kind of slowed down, so now they're looking for additional buyers, and we've got people who have cash and want to buy.
And this is awesome. And this best for cash buyers?
Yes, but we have some where the buying side doesn't know we're coming with financing, but the terms and timeline work so we can still lock it up with financing.
Yeah, and this is where if you get horizontally aligned, you could become the bank too.
Yes, eventually. Yes.
Just got to buy a bunch of whole life insurance policies, my friend.
Yeah, yeah, exactly.
Be the Rockefeller play. Dude,
Yeah,
that's awesome, man. I
yeah,
It's so interesting. Um, you might have undersold share a bit to me, brother. Yeah, we got
maybe.
no, this is
Yeah,
I mean, you got a great product. Because
thank
you
you.
said it, but then I'm like, hold on. Did you just say so? Yeah, this is you're giving us institutional like kind of access without being institutional by
Yeah,
working through share. And I guess the question I'll ask, because I want to make sure, we could go on for hours. I want to make sure that we can send people your way and see how they can work with you and your team. But when we say, these are deals, again, kind of like what you said, big deals before it's all relative. What are we talking about? Is there, are these truly numbers because you're getting access to them in bulk that, what can we expect, right? We talk about Georgia, right? 4 bedroom, 5 bathroom. I don't know. Depends what
yeah.
area, but like, is it truly a discount? Is there, just by a bit, or is it just the fact that you get access to these deals that aren't even hitting the MLS? Is that really, I mean, that in itself is a selling point in my eyes, but
Yeah.
I'll let you elaborate on that.
Yeah, so we there's a multitude of these types of deals.
Mhm.
Some of them are discounted. Depends again on the terms, but the price we typically do 3 bed 2 bath anywhere from 150 to $400,000. That's sort of the range depending on the state and metro. But ultimately we try to back into whatever cap rate the client is looking for and the annual appreciation targets. We'll try to always go in there, try to bottom dollar because it's in our best favor to see that equity lift. But depending on, again, the deal source flow, like if it's a wholesale or whatnot, they might know that they can put in a bigger assignment fee to chew up some of that equity.
Yeah.
But there are some good discounts. We'll get 5 to 10% in some of them.
That's awesome. That's very interesting.
Yeah,
Listen.
and lease backs too are big ones for us too. We get a lot of those.
Ooh, that's that's key. That's key. So strategic alignment is the theme. And I cannot wait to see how all those pillars align horizontally or even vertically. I think there's the end is the best is yet to come, that's for sure. And I could just see that there's so much there for a share. I know we talked about this offline. You told me how and where I can tap in to share. Where can the lovely listeners had not only a ball while we were listening to this as much as I did, but where can we find out more about the easiest way we can own U.S. rentals homes?
Yeah. Go to sharesfr.com. Share SFR. SFR is a single family rental.com. You can create a free account. And when you're ready to go, we will do a formal intake, understand sort of your financial criteria, your financial strategy, and then actively search on your behalf. So any of the homes you see on our site are just samples or past deals. When we start looking for you, those deals will go directly to your inbox before it goes to our website.
Wow. Boom. Say less. I don't know what else you need to do that. That sounds like a mic drop to me. Listen, Andrew, I had a ball just chatting up with another
Likewise.
entrepreneur who appreciates the process, tackles it, and also was able to share your framework in being able to understand in your lens the opportunities, how you tackle them, ideation, serving the marketplace, finding a problem to solve, and then creating a quality product. You've done it before, you've done it again, and I cannot wait to see what's in store with what
Well,
you're gonna do with Share. So that's
awesome.
awesome, brother.
I
Just want to thank
appreciate
you
it.
for coming on the show, bro.
Oh, thanks for having me. I had a blast.
Absolutely. And just like that, Experiment Nation, you heard it here first. Share SFR.com. Check it out. And just like that, we are out.
Experimentation, I believe there are two critical components that will help you achieve your goals very quickly and succeed. Number one, it's information like this that you received on a show, in an episode, and content that you can find on my YouTube channel or anybody's channel. And then there's a community. And the way we've been able to expedite our process, the way people in our community, people that we consult, mastermind members, whoever, they get the information on an episode like this, but then they also have the support, whether it's me guiding them or being guided through a community. There is an opportunity for you listening to be able to expedite your process or even expedite your results that you're seeking by being in part of the community. If that is what you're interested in, we at Experiment Nation happen to have a community devoted to helping maximize your occupancy and your profitability altogether, regardless of which market that you are in. And for that reason, you have an opportunity where you can go to experimentrealestate.com/submit if you're looking to work in an environment that can help you prosper faster. Call out any areas that you might not be familiar in, especially the blind spots. That's where a guide comes in hand, and I would be a pleasure and honor to be your guide. But in order to make sure you're a good fit, make sure you go to experimentrealestate.com/submit so that my team can go ahead and take it and see if you're a good fit to join the mastermind and the multiple programs that we have. In addition to that, I'm also now a YouTube partner, which means that I want to give you more access to information, more access to Q&As, more access to the questions that actually come out of our mastermind to help people expedite the process. We've seen people get anywhere from $4,000 to $5,000 to $6,000 to even $7,000 a month net on just one door by applying the strategies that we use by working with corporations and furnished accommodation in a very strategic way. So if you're interested, make sure you also subscribe, because I'm going to have different tiers that's on YouTube now that we've become YouTube partner, to continue to be the bridge to your success in your lab. And your lab means your life, your goals, or wherever you're trying to head. So make sure you also hit the subscribe button on my YouTube channel. That's youtube.com/real estate experiment. We'll be there. You can also look us up at Midterm Rental Insurance Experiment. We will be there. Make sure you hit the subscribe, because that's when you'll know the tiers that are available to you that make sense for you, your marketplace, for your results. Remember, you're only one experiment away. Let's build.